Good afternoon, everybody, on this Fed Wednesday, this Fed Decision Wednesday. Market's been very, very muted, really leading up to the Fed decision today. They just came out about a half an hour ago, leaving rates unchanged. Not really sure where that's going to go in the future. The market has rallied off of that. We'll see if for one of these days the market can actually hold that. Before I talk about the topic of the day here, what I want to tell everybody is stock and stock option trading involves a substantial degree of risk, may not be suitable for all investors. Past performance is not necessarily indicative of future results. Here's what I want to talk about today. I want to talk about gold and the US dollar. Okay? No, this is not an economics class. We don't trade futures and currencies here, but that doesn't mean we can't trade options. And why does gold and the US dollar, why does that matter to me? Why does that matter to Prosper students? Well, let me give you the kind of 30, 45-second history on gold and the US dollar, and then we'll dive in right to where we found what I believe is a fantastic signal. Okay, so gold is priced and traded in US dollars, and how does one affect the other? Well, the most common understanding of this relationship is that the stronger the value of the US dollar, the lower the price of gold, and vice versa. Okay, so while gold typically has an inverse relationship to the dollar, it's not always the case. It's driven by global supply and demand, and there have been times when gold and the dollar have risen together. Okay, what happens when there's economic uncertainty and the US dollar weakens? Okay, well, there are definitely patterns. Okay, and here's one of them that I want to show you. Now, here's one that this pattern you're going to see here, and I'm going to bring this chart in here right now. This chart is basically a mirror image of one another. Okay, so you've got the US dollar in the candle, the green and the red charts. I'm sorry, excuse me. You've got the US dollar in the blue and gold in the candle charts. And you can see they're exactly a mirror image of one another, especially going back over the last 6 to 9 months. Okay, so in the last week or so, week and a half, we've actually seen a big rally in the dollar, right? There's been so much talk over the last few weeks, month or so, about the weakness of the dollar. We've seen a nice rally here. Well, the dollar has come up to a point that is really at some resistance. Here's where it was back at the beginning of the year. We're kind of right back there. Well, at that same time, if we look what gold has done, okay, we can see gold rallying as the dollar was going down. As the dollar went up, gold came down. You can see the pattern, obviously. And now they converged right back to this point where we are today. So the dollar rally, gold getting hit. Well, the dollar is now at some resistance, which is great. And as you're going to see here, gold, this is actually GLD, okay? So it's an ETF because we don't trade gold futures here. There's options traded on this. As the dollar rallied to some very nice resistance, the gold ETF GLD came right down to this spot right here of some fantastic support. So if the pattern continues, if the inverse relationship continues between gold and the dollar, which it historically does, with the dollar being at some good resistance, gold being at some really good support, we identified a phenomenal potential spread from a reward to risk standpoint. So what we did, we actually put this signal out yesterday. We revalidated the signal again today. Some students got filled yesterday, more got filled today because the GLD, the ETF, was actually trading down. We put out a signal yesterday going out to June 8th weekly expiration to buy the 125, 127 call spread, which you can see we did. It's up in our watch list here. Okay, this was when GLD, and I'm going to refer to it as a stock, but it's an ETF. This is when GLD was trading down around 123.60. we paid for this 125, 127 call spread, we paid 53 cents. Okay? Now, why do I say that's such a great opportunity? The reward to risk. And everything we do is about opportunity and its reward to risk. So if this thing does max out at 127, which is the projected move for GLD out to June 8th, if it's to the upside, okay, it had a projected move of about $3.50, which targets 127, then this spread would be worth $2 for a profit of $1.47. Well, a profit of $1.47 on a 53-cent investment is about a 2.77 to 1 reward to risk. Phenomenal. Phenomenal reward to risk. Okay, so I really like this for a bunch of reasons. A, the dollar was at resistance. GLD ETF was at some big support. These two asset classes have been working really almost as a mirror image, inversely together. So that should continue to happen. The reward to risk opportunity was fantastic. And that's what we do here. That's what we try and identify is potential opportunity using reward to risk. So the 53 cents that we bought this thing at, it's currently trading in the current market here about 67 cents. So in less than a day's trade, this thing is up almost 30%. Now, is that going to continue on a day-to-day basis? No, I'm not looking for GLD to get to 127 by the end of the day today, tomorrow, the next day. That's why we bought ourselves some time. We bought ourselves, almost 6 weeks going out to May 8th. I'm sorry, to June 8th. So this is a wrap-up. Wanted to let everybody know that we not only just look at equity options, we trade ETF options as well. Okay, and it's all about reward to risk and opportunity. And that's what we look to take advantage of here at Prosper. Thank you guys for tuning in today. I want to give a plug to Michael Shore's webinar next Tuesday about how he uses AI, artificial intelligence, to strategize and to come up with potential option signals. That's what the webinar is going to be on. You can find links on the Facebook page or on our website, and it's going to be an exciting event. Doesn't cost anything to sign up. It's going to be well worth your time. Thanks everybody for listening, and have a fantastic trading day. See ya.